Hi, this is Eliza Chong from Elizadreamhomes. Thank you for clicking play to watch this video. We really appreciate it. Today is a very special day because I have my good friend Donna Dasgupta here. She is from Pineapple Mortgage, and here she's going to give us all the information about interest rates. So Donna, welcome to the video today. Thank you so much for joining us. And I have so many questions for you, but there's a big question that I would love to ask you is why don't you give us an insight of what's happening with interest rates?
Well, thank you, Eliza, for having me, on today's talk. Definitely love to share some information about interest rates with you guys. If you don't mind, I'm just probably going to share my screen because I have some slide deck that I can actually share.
Sure, go ahead. Thank you.
All right, so I think you can see the screen, Eliza.
Yes, yeah.
Okay, perfect. So just kind of give, a little bit of an update. So, last week, the Bank of Canada, they actually announced that they increased their, policy rate by a quarter point. So, that brings us currently right now, our key rate to 4.75%. So how does this affect people? Anyone who's on, a variable rate mortgage, this the new prime rate currently now is 6.95%. So, people who are on a variable rate mortgage, that means their interest rate would probably increase, meaning that their monthly payments are going to also change if they're not on a static payment. Anyone who's on, line of credits, HELOCs, and credit card balances as well is also on like based on a prime rate, right? So that is something that's very important to many Canadians nowadays because they're watching to see inflation, watching our market, right? So, saying that, we have also noticed that with fixed rates, right? A lot of clients are actually choosing to pick a shorter term over the 5-year, fixed rate term. Most popular right now we're seeing is clients are choosing maybe a 3-year term. However, we have noticed that because of the recent bond yields, there has been a hike in the bond yield from 20 to 60 basis points. This has actually, increased most of our short-term rates. So in the last 3 weeks, we've noticed that banks have increased their fixed rate. So previously you might be able to get something under 5%. We're all kind of now looking at something above 5% for like at least like a 3-year or above term. One thing I also wanted to touch base on is about mortgage renewals. The Bank of Canada, recently has mentioned that borrowers that would be most impacted, right? Well, when their renewal comes up, will be in 2025 and 2026. They're seeing that households that did take out a mortgage between 2020 and 2022, they're currently carrying 17% more like credit card like debt on average than those who took a mortgage in 2017 and 2018. So, how does that also affect, I guess, renewals? We are going to probably see, Bank of Canada saying that they're estimating that borrowers can see a spike of at least 20 to 40% in payments. So if a client is on a fixed rate mortgage, they may be seeing payments increase between 20% to 25%. And then with a variable rate holder, like who's on a static payment, meaning that their monthly mortgage payment does not change. However, when the prime rate does change, what happens is that in the back end, it gets adjusted. So you are paying more interest, but your monthly payment doesn't remains the same. You would have to actually increase your payments on average of at least 40% in order to maintain the original amortization schedule. This is important for us to also talk to many of our like existing clients if they are coming up for renewal, just try to figure out what options are available to them. So what we mean by that is that maybe the client may want to extend their amortization, right? So maybe we want to do a refinance for them so that they can re-extend their amortization to bring it back to a monthly payment that's more, I guess, comfortable for them, right? Other ways of also just, looking to see, what's the best product for the client? Is it something that, are they looking to take out equity, or if they're looking, when it comes up to maturity, that's when they're not going to be I guess, have to incur a penalty, right? Because they're not breaking the mortgage; it's coming up for renewal. So, at that point, that's when it's the best for them to also, if they are looking to take out equity or they're looking to make any changes to their structure of their mortgage, then that's when we should reassess the situation. With my clients, we usually like touch base at least 8 months in advance, because, when we initially maybe started their mortgage, it was 5 years ago, right? So a lot of things may change in 5 years, maybe, change of employment, maybe, client may want to even, upsize, downsize. And, that's a great opportunity for us also to bring the client back to, like any clients, Eliza, you and I are working with, it's great to bring them back to you as well, right? So that you can actually maybe help them to assess, oh, is it that they want to move to another area, or are they looking for a different type of property? And, that's your expertise, right? For, to obviously provide that amazing, experience, finding their dream home. I would say the most important thing right now, the key is to get a rate hold, right? So, a lot of our clients who are right now shopping, we have like a rate hold for them. What that means is that we would secure a pre-approval for the client, which is valid for 120 days. So that while they're shopping, if they can find a property and close within that time frame, then they are honored that rate. Right now, the market we're in, a lot of lenders are anticipating that there will be another, increase in rates in the near future. So it's always great to have something secured for them so that if they, can take advantage of that, secured rate, then that's, great that they can do that. If not, then, while they're shopping and they don't have something secured, if rates go up, then they're, applicable to whatever current rates are available at that point of time.
So that's very important, especially for buyers nowadays, to contact you to get a pre-approval and lock the interest rate. Is that correct?
Yes, for sure. And even like working with like a lot of our pre-construction clients, they may not have a firm closing date yet, but if they do know their occupancy date, right, their firm occupancy, we can also use that date to kind of help them determine when we can help them secure also like an approval. I understand that builders may have delays and they might not be able to close within, the 120-day period. But simply, what we do is just we help them secure another fresh 120 days so that when, firm closing date does come up, then at least they have something secured for them as well.
Oh, that's excellent. That's good. Yeah, I'll make
Yeah.
sure that they contact you. I have a few buyers that are actually planning to buy.
Yeah, no, thank you so much in advance. Like I'm always here to help, and whatever questions they have, feel free to contact me. I'd be like happy to assist.
Yes, yeah. So I think that's summing up all the information that you have. So your suggestion for all the buyers right now shopping is to get a pre-approval and lock the rate. And how long was the period that's locking?
It's 120 days.
Oh,
Usually,
okay, that's
yeah,
really
it's
good.
dependent on the lender, but 120 days.
Mhm.
As a mortgage agent, I have access to not only like the big fives, but we also have access to, B lending as well, right? So that's alternative lending. So, usually with those lenders, it would be probably 90 days to 60 days, depending on which lender we're using.
Oh, okay, that's excellent. So the people that have maybe not a very desirable credit rating, they can still be able to get a mortgage. Is that
Yes,
correct?
that's correct. Yeah. And it's not always just, clients with bruised credit, right? With B lending as well, it's also great for our clients who are, their income is self-employed, right? Or if they're looking for stated income. So, we have like alternative lenders who have programs that can help those clients, who are earning income in that sort of form.
That's excellent. Yeah. So I guess that's sum up today's section for the interest rate. So if you have any questions regarding interest rate or regarding mortgage, I am going to include Donna's information on contact information, so you can contact him anytime. And I think there is more to you going to share. Are you Donna? Or
Oh
you
yeah, sorry. One last thing was just like debt
okay.
concerns, right? Like, I mean,
Ah,
RBC did recently, their economics, we're expecting that there is going to be like an employment, I guess unemployment reach, right? Later this year. So, they are calculating to say that like there's going to be higher debt loads, right? So, higher interest rates to catch up to many financially like stretched mortgage like holders. So, the greatest risks are just like, again, as I mentioned, people who might have, bought a home between 2020 to early 2022, when the interest rates were the lowest. So again, the reason why I'm just mentioning it too is that, when they come up to maturity, because they might have taken a mortgage with a very low interest rate of like under 2%, it's important to sort of, for us to, tell them what it is, potentially what they're going to be paying, right, as an interest rate, and what their monthly payments would be, so that they can have the time to figure out what
Oh,
their solutions are.
yeah, that's great. Yeah, so I'll send the information out. So anybody have any questions regarding mortgages, or they know they have an upcoming 2025 mortgage renewal, they can contact you, and you and your team can help them, right?
Yes, thank you so much.
That's,
Definitely
that's
would, love to
yeah.
assist.
Yeah. So I just want to thank you everybody for the time to watching this video. So again, if you have any questions regarding interest rate and mortgage, don't ask me, ask Donna. If you have any questions about real estate, I'm the person you come to. Okay. So take care and have a nice day. Thank
Thank
you, Donna,
you.
for your time.
Thanks,
Bye-bye.
Eliza. Bye.